It is time for the State of the Union address for AMC stock and where we currently sit as far as the short squeeze is concerned. Because as you guys know, things develop and change on a day-to-day and certainly a month-to-month basis, and you must take in this information and come to your own conclusions and refine them over time. So that's what I want to do here in this video. I want to go over what has changed, where we currently sit, why I sleep like a baby at night buying and holding AMC stock even though I'm still down like 40% give or take on my position, and ultimately when I think the MOASS will happen. With that being said, let's get into this video. Hit the like button and subscribe to the channel for me. Thank you guys that went ahead and did that. If you guys want to join a trading community, support the channel, and make a lot of money, then check that link out pinned down below in the top comment. Ask me questions over there. Ask me anything. Source your own trades as well. That is your source to do that. Get yourself some free stock as well. Link down below in the description with Webull, Moomoo, and Public. Okay, so let's start off with the basics here, because most of this video I want to go over the mechanics of how we are going to squeeze and when I think we will squeeze based off of these mechanics and what needs to happen to actually see a short squeeze. So the obvious here, AMC $18.53 per share. Right now we closed above $18.50, which was a very important level to maintain this bullish trajectory, which we did do today. We also did close obviously above $17.75, which was the next most important level, so that is very bullish. We also did close above that 20-day moving average, which is the blue line in between the Bollinger Bands. We actually wicked off of that earlier in the day, and that is at $17.52 per share, bounced right back up, so that is serving as a really nice level of support at the current moment. We know it's looking pretty good. We were positive the day after earnings. We recovered a lot intraday, so that looks good. I also do want to throw out there that a lot of people have this misconception that AMC falls after earnings. Historically, the data suggests otherwise. Back here in March, we actually rallied 100% after earnings. The day after earnings, the next following day, we were only up 4%. Back here in May, I think this one speaks for itself, but the next day after earnings, we were up 5.6%. We then rallied over 1,000% 1 month later. Same thing back here for August. We were actually down 6% the day after earnings, but we followed that up with being around $30 during this period of earnings in August 2021, rallied up to about $53, $54 per share about 1 month later. Now, we were, last earnings, we did not do so well. We actually went down and have fallen ever since last earnings. So, historically, AMC tends to do well after earnings, especially if the price of the stock is positive the day after earnings, which we were today, up 1.15%, holding up support at those key levels, like I just said. So, history, data is on our side when it comes down to the short term, talking about a possible rally in AMC stock in the next couple of weeks. I went over this in depth in the last video, but now I want to kind of switch gears. I want to talk about what has been going on in the broad markets, because believe it or not, when AMC squeezes, it will have very little to do with what actually happens with AMC stock. Think back to all of the times AMC would rally. We went from $30, like I just said, to $54. Were shorts forced to cover? No. We went from $8 to $72, almost 80 bucks. Were shorts forced to cover? By and large, no. The small guys, some of the mid-level shorts, sure, they were forced to cover because they didn't have enough money to service those margin calls. That's what it comes down to. Margin calls and forced liquidations, because you can see a margin call and not be forced to cover if you have money to service that margin call. When you don't have money to service that margin call, think back to all of the rules that have actually been proposed and then implemented during the last year because of GameStop and AMC. Now, firms are receiving intraday margin calls at 2 p.m. if they don't have money in their margin account from that margin call at 11 to noonish. you get forcefully liquidated on your position, and then they will cover on that short position. But as long as firms have record levels of liquidity, that will not happen. But good news is we have been seeing dominoes falling in our favor since last November, and you're starting to get to a level where liquidity is starting to dry up more and more. Think back to November. What started to really happen in November? It was the Evergrande real estate crisis, and this is not over. You just don't hear about it that much, but there is still firms that are defaulting all of the time. They are trying to contain this massive bubble, this bad situation, but unfortunately, it's not going to happen. You've seen a lot of people, even firms, coming in and buying the dip on a lot of these Chinese companies, but what goes up must come back down, and there is no way to truly save a bubble once it starts to pop. And the Chinese real estate market is certainly in a bubble. It has risen 698% since 2001. That is much higher than what real estate has went up in America. I believe that is 3x the pace that American real estate has appreciated. And like this picture says, the best case scenario for when this bubble pops is going back to 07 levels. That would be a 63% decline as of right now. And if there's one thing that you have learned through this Russia situation, is that what happens in other countries will affect us. It will have some kind of consequence. But what you should also know is America, compared to Russia, we have a 10 times larger economy. China, not so much. So there is much more direct ties to China's economy compared to Russia's economy tied to us. So we do much more business with them. So when China fails, that's when America really feels the pain. And keep in mind, like I said, Lehman Brothers, they took 1 year to go bust. So really, I would expect the Chinese market to go bust in about 1 year as well. History doesn't always repeat itself, but it usually does rhyme. So that would put us in that September to November timeframe, even maybe October, because they started to have issues before November. So in that relative time frame. So that's going to be very important when we talk about when I do expect the MOASS to happen. But what other dominoes have fallen recently? Obviously, the Russia situation. Like I just said, Russia invaded Ukraine. That's definitely a huge domino. Why? Because a lot of people have lost a lot of money, and banks love to invest in Russia because Russia has one of the lowest debt to GDP numbers with only 18% debt to GDP. For comparison, America has 140% debt to GDP and Japan has 236% debt to GDP. So Russia was seen as pretty much foolproof. It's very unlikely the government would default on their debts, obviously, before this happened, and you would get paid out 4.5% for owning a Russian treasury bond in 2019. And actually, JP Morgan said that Russia was, in quotes, bulletproof because of that. Now things have turned around quite a lot. Citibank alone lost $10 billion on their investment in Russia. They only have a market cap of a little bit over $100 billion. So they have effectively lost 10% from their Russian investment, 10% of essentially their value from their Russian investments. So even though all banks have not been transparent about this, eventually they will, and that will also put a lot of pressure on the financial system in a whole, because Russia, their bonds are already labeled as zero, and even Russia's largest bank, which is actually this bank, Sberbank, I don't really know how to pronounce that. Sberbank, Russia's largest bank by assets, serves a considerable part of the country's population. One of every two companies has an account there, according to the bank. This bank, their stock just went to zero, from about $12 to zero. So you can't even be paid to buy this stock. It's literally at zero. It's priced as if there's a 100% probability this bank will go out of business. And like it just says, that one of two companies in Russia has an account in Russia. So that's not even to mention who individually has exposure to Russia. I'm sure a lot of hedge funds do. So that was another big domino that just fell, and that is so soon that, well, it just happened. So it's hard to tell what the actual implications of that will be in the short to mid or even long term. So we're going to have to wait and see how exactly that does play out. But a lot of banks and a lot of hedge funds are feeling a lot of pain as of right now. The other thing that just happened is that Citadel and banks alike have been probed for their block trading activities. Basically, the argument is that the banks have been tipping off market makers and vice versa, tipping each other off to make tons of money by doing these illegal activities. Like, hey, we're about to short a bunch of stock because a lot of retail investors just bought a lot of AMC stock. So you might want to make a short position too. And then they drive down the price like crazy. That's a simple, very simple analogy there of what possibly will come out once that investigation is over. That will take a little bit of time, but still, you've seen AMC move a lot differently. So I think there is less manipulation going on with the stock at the current moment. We also know that shorts have some kind of egotistical battle with AMC and refuse to cover on their short positions, and we'll get into that in just 1 second. But just yesterday, we got a short squeeze type 3 buy rating with a mean return, so an average return of 20.75%, and only for 2 holding days. So we'll have to wait and see exactly how that happens. Usually these are wrong and they do take more time than what they forecast, but usually they are right to a certain extent. So interesting little fun fact for you guys. Now, as far as the short activity, 20.57% short interest, 105 million shares that are sold short, cost to borrow max of 3%. Borrowed shares, 6.74 million for the day. Hedge funds, they love to beat the stock down after earnings or after another positive announcement. They love to short the stock. That's their favorite thing to do, and it's all egotistical at this point. Why would you short a stock that is down 60% and not short another stock that is very much overvalued and overpriced? It's all an egotistical battle, and that's what is ultimately going to ruin the hedge funds. Once all of these things happen, once we see the full effects from Russia, once the Chinese markets take a big beating, once you do see growth slowing down and interest rates jacking up, you're going to see a lot less money in the system. And then once AMC does rally from there, once you see some kind of catalyst, that's when you will see the MOASS. That's when shorts will get margin called and they will not have enough money to actually service those margin calls. That's what I expect, and I think that is very straightforward logic here, but it has nothing to really do with what happens right now with AMC stock. If we've seen 100% move in a single day, if we went from $18 to say $35 per share, would that cause shorts to be forced to cover, get forcefully liquidated? Probably not. You need to see a lot more pain and a lot more liquidity dry up to actually see the MOASS. And that's what I wanted to stress here in this video. So when you put together all of this, when you factor in how long it's going to take for the Chinese to see their real estate market collapse, their financial system collapse, that's going to be about 1 year from the onset of that, roughly. So like I said, that puts us in between October to really November, or even September through November, sometime in that time frame. By then, you're going to see the long-term effects of this Russia situation with the sanctions, and I'm sure there's more to come. You're probably going to see high inflation still, and the Fed likely would have jacked interest rates up to about 2%, give or take. And you will see growth slowing down. You'll see much harder numbers for companies to beat year over year compared to 2021 around that time, because that's when you're going to see the time period where you're not in peak holiday spending season. You don't have as much money left over from stimulus, from taxes. And that's what's going to lead to a lot of hedge funds not having as much money and the market's going down, and ultimately to see the MOASS. Now, these are only my opinions, but that is really my time frame that I am looking at personally for the MOASS, is in between September and November. And I know I'm going to get a lot of hate for that because people want the MOASS to happen tomorrow. Sorry, unfortunately, we don't have enough liquidity restricted at the current moment to see the MOASS, but it is coming. And if you guys just don't want to wait, if you guys want to trade other stocks, buy other stocks, by all means, feel free to do that. I'm not a financial advisor. I am not a financial planner, and I am certainly not your pops, your dad. So I'm not going to tell you guys what to do. I personally own a wide range of different stocks, and I trade on a daily basis. So if you guys want to be a part of that, link down below in the pinned comment in the comment section. If you guys want to get totally free stocks, links for Webull, Moomoo, and Public in the description of this video as well. That's going to be all. That's the main gist of the State of the Union address for AMC stock. So thank you guys for watching, and I will see you later on tonight on the live stream.